Lots still ahead in 2024. We have earnings coming our ways. With some US corporates, they're essentially restricted on reporting news and commenting until late October. And then, of course, we have the presidential election and another Fed meeting. Our guest says that markets will remain directionless at least until the election, as they tend to perform better when uncertainties are resolved. Her current focus is on preserving gains made in 2024. She has a few sectors and stocks to highlight. We're joined by Diana Avigdor, VP, Portfolio Manager and Head of Trading at Barometer Capital Management. Diana, always great to see you. Thanks for joining us.
Thank you for having me.
So it really hasn't been a bad year. The American market's up 20%, Canada's up 15%. You think the game is partly just hanging on to the wins you've already achieved?
I think, preservation of capital is always at the top of our mind, but right now we have preservation of gains at the top of our mind. It has been a pretty good year, and I don't expect it to not end on a good note. However, in a risk-adjusted return, our portfolio is now casting a wide net with exposures in different sectors to a certain extent, just wanting to wait out the different events that are happening until the election. And, markets don't love unknowns, and all of these things are unknown. So, if you look at this week trading, for example, it's been up and down as this soft landing thing is giving me, making me very happy, actually, how it's playing out. But, the volatility is high. You can see the VIX was close to 20% today, and that's high. So there is a little bit of fear in the market, and we want to make sure that we don't give back anything, as we're probably going to end the year well. We can just ramp up after the election.
The fact that the Fed is cutting interest rates, though, indicates that they do see a slowing economy, or at least, a cooling economy with inflation under control. Is that something people should be worried about, though, economic weakness?
I think they've actually done an excellent job. They've got inflation under control, but they do have a dual mandate, and the other side of it is employment. And we saw some excellent numbers today, and I can tell the market is confused. It was up strong, was down, almost looked like it was going to go negative today, but it's clawing back up. People are not sure whether good news is good news or if good news is bad news. But bottom line, employment, people working, is good news. Now, the Fed rates are still restrictive. They may not need to cut 50 beeps, but imagine if the narrative out there was that they need to cut 50 beeps. Wouldn't that be worse? Right now, they're still restrictive. There's still about 2.5% real rates out there between where the Fed is and where inflation is. There's room to cut, and there's room to grow and meet somewhere in the middle. So I think today's data is quite Goldilocks. Not every data shows up this way. This one was good. We get CPI next week, so we'll get more information. And of course, earnings are the bottom line, the only thing that matters.
We're in this blackout period because of the forthcoming earnings reports. So that means stock repurchases are restricted, Diana?
Yeah. So companies. So first of all, I'll back up a little bit. Corporate buybacks for 2024 have been extremely high. So that has been a consistent buyer of stocks in the market, and of course provides support. Any buying provides support. Before earnings, we have companies blacked out from buying back their stock, except those that are set on an automatic buyback. But that still takes away about 35% of the corporate buyback demand, and that can contribute to the directionless up and down, takes away a buyer 35%. There's still lots of other players, but that still can provide a little bit of less buying as we go into the earnings season.
What asset classes are interesting you right now, Diana, or are there areas in the market you're avoiding by contrast?
You know, we are pretty diversified. We have increased weights in utilities in the last couple of months. We have been pretty overweight financials all year. Our financial book, however, is pretty diversified. We did buy a couple of REITs as they benefit from coming interest rates coming down. We still have some technology names, Microsoft, Apple, and energy. We have about 10% of energy, but we have been using it a little bit as a source of funds as that sector has been a little bit sloppy. We need to see some stability in the oil price. It does have a geopolitical bid. The market is pretty well supplied, so we'll see what happens there. Gold, we have a couple of golds, Agnico, Kinross. We are mindful of these companies being in good geopolitical locations, so domestic focus, political stability in golds. As you know, it's a very volatile sector, and so you have to weigh it properly from a risk-adjusted reward perspective.
One stock I was interested to see that you own is Campbell's Soup. They are actually planning to take soup out of their name to emphasize their diversification. But you think this classic consumer staples name offers promise?
Classic stable name, if you look at consumer like Campbell's Soup, with stable margins consistently for years. And if you want to take away the torque out of your portfolio, these are the kind of names you want to look at to offset, things like the golds and the oils and some of the technology. Utilities, that is another anchor in the portfolio from a stability. It's a bit defensive, but utilities also now have another growthy side to them as it relates to the demand from the AI sector. So that has kind of taken up a little bit in its volatility or risk, but still offers anchors to the portfolio.